Congressman Thaddeus McCotter, he just took a break for us to talk to us about the testimony from Mr. Bernanke. Congressman, thank you for stepping out for a moment. Have you heard anything from the Fed chairman? Obviously, the headlines we're getting from our reporter here in New York is that he's going to keep interest rates low. Have you heard anything else from him this morning that caught your attention?
Well, Cheryl, I think the one thing that we continue to focus on is the fact that the Fed does have to keep the discount rate low to try to continue type of economic activity that we're currently going through, rather than seeing the free market be able to step up and fill that gap, which would then be the precursor to him using many of the exit strategies to contract the monetary supply which is out there. So for our ears, what we're concerned about is twofold. One, the continued low discount rate at the Fed is not an encouraging sign in terms of long-term or short-term economic growth. And secondly, are we seeing enough out of them to make sure that they can contract this, which, as Mr. Bernanke said, would occur in due course when the expansion matures, whatever that quite means.
Congressman, is there any exit strategy from the Fed? Can they ever raise rates, given that the bond market's seeing a very crowded trade with a lot of government debt issuances around the world? We're in a worldwide government bubble right now. When and can they raise rates?
Well, I'm very glad that you used the phrase government bubble, because that's what we're seeing from the United States' trillion-dollar stimulus, which has not worked, to other nations with their problems. And this is where you're absolutely right, the problem does come in, is if the United States is not shown as having a fiscally responsible government, if it's not shown as having an economy in which people wish to come in and invest, or in which people here choose to help move forward with their own investments of innovative capital to try to spur it, where are we going to go and find people that are going to try to purchase government securities in the United States? And that, I think, goes to the larger picture, which is being touched upon, is, again, the fiscal irresponsibility of the country at this period of time. We've just seen where Social Security, for the first time, is going to be running a deficit this year. We've had that, and we now see the president running around with another $1 trillion entitlement program. This is not sending the right message to people. So when does he start to contract? When does he start to try to raise the interest rate? It's going to be very hard to see when that will occur.
Well, Congressman, another issue that's on the table for the Fed right now is do we increase the power that the Fed has? And obviously there's differing opinions. And I believe you've always been on the side that we should not increase the power of the Fed. Have you changed your mind at all, Congressman?
Not at the present time, no. I don't think that giving them, especially as we talk about, are we going to be able to have them pull out of this expansionary period with unprecedented powers in their history? We've yet to see whether that will be a justified decision or not. So to increase the powers of something whereby you do not know whether what they're currently doing is going to work or would have justified action seems to me very precipitous. I'd rather always come down, Cheryl, on the side of having elected, accountable people make decisions, because you can throw them out.
Congressman, it's John Layfield here in the studio. You have a problem here with the Fed has been the entire market for these mortgage-backed securities. You also have banks that have accreted about 8 points, which adds to about tens of billions of dollars on their balance sheets. Banks, at best, have hard comps going forward. And with shadow inventory, we've kicked the can of shadow inventory start coming out in April. Don't you see a real problem here of a double dip in housing? Add to that state budget shortfalls, which are really contingent upon property taxes. We could have a real dilemma here by the end of the year.
You are absolutely right. The shadow inventory is starting to come on the market. We're seeing a large jump there. We're also very concerned about the impact fiscally for the states. The stimulus package that was put forward simply gave them breathing room to try to address these problems. But as the housing market continues to slump, as the commercial market continues to have problems, we're not going to be able to have any confidence that the economy is going to pick up so long as those are out there.
You know, Peter Barnes, you were able to sit down with Mr. Honig yesterday in a Fox News exclusive interview. He has been the lone dissenter within the Fed. Have you heard Mr. Bernanke say anything today that resembles what Mr. Honig told you yesterday?
Yeah, absolutely. No, there's no question that the chairman is once again trying to lay the groundwork for getting out of all these extraordinary programs, selling off or doing something with the $1.5 trillion in mortgage-backed securities that the Fed bought to try to help keep mortgage interest rates low over the last year or so. And he is again repeating that, you know, again at the appropriate time, and that seems to be when we start seeing some real job creation and a decline in the unemployment rate and a sustainable economic recovery, that at that time the Fed will start taking these kind of steps. And Honig did say yesterday that he said he might be alone, but that doesn't mean that he's not right. So we've heard from some of the speeches from some of the other FOMC members that we've heard them talk like Honig. They just haven't voted with him yet.
You know, Congressman, you raised a good point about the fiscal dipsomaniacs down in Washington. The issue now, and also you bring up Social Security. Social Security is going to have to redeem a lot of those Treasury bonds and start paying out cash to retirees. I mean, we're seeing a gushing fire hydrant of bond paper in the markets now. Is anybody besides yourself in Washington worried about that?
I think a lot of people are. I think what we're seeing out of both parties is a realization these entitlement spending is out of control. Unfortunately, there was not enough of Republicans and Democrats to stop the latest entitlement, which was the government takeover of health care and putting 30 million people, new people into the system. But I think the reality, Cheryl, is what's going to happen is this. These programs are unsustainable as currently constituted in a globalized economy. The pressure will come from the American people to get the elected officials to address these problems in a serious and a helpful way, because prior to this, what we've seen is politicians afraid to deal with the issue because of the public. I think we're going to see a time come very shortly where politicians will be afraid not to deal with the issue because of the public pressure.
All right, Congressman Thaddeus McCotter and Peter, both from Washington. Congressman, I need to get back to the hearing. Thank you very much for talking with Fox Business. Well, as the Fed chief